My name is Louderback. I've been a real estate investor for probably the past 7 or so years, 5 of those being flipping houses. But our current specialization is in mobile home parks. We closed our first one about 2 months ago and are looking for other opportunities. So if anybody knows any mobile home parks, let me know. And what we're going to do today is I'm going to have a couple of announcements just after this, just the next meetup, other little things. If anybody has any deals or anything like that and forgot when they went around, they're welcome to share deals. Then I'm going to go through a brief slide, just really general terms of multifamily syndication. I'm going to turn it over to Mr. Sewell so he can speak on everything that he knows. So the next meetup is September 18th. If there's a lot of questions on multifamily syndication afterwards, just want to discuss it more, we could do that as part of the next meetup as well. But right now the topic is going to be passive investing and private lending. And then another announcement is I had a gentleman reach out to me as a graduate student here at JMU. He had moved here for his degree and is looking for a home to rent. So it's just a couple, him and his girlfriend or wife, no kids, no pets. So if anybody has a home to rent or knows of one to rent, let me know so we can help them out.
Will they come to Woodstock?
I don't think so. He's trying to stay close to JMU. He sounds like he'd be a good guy though. Yeah. Do you have one available in Woodstock?
Yeah.
Anybody, any agents here work Woodstock? No? Okay. I was going to say maybe they could find somebody for you too to refer, but the last thing is I do have a close friend and potential partner that is purchasing a mobile home park in Georgia. It's not a syndication, so this opportunity to essentially be, you have to bring cash to the table and have some sort of active role. You'd likely be overseeing the park manager, making sure that the property is hitting its trajectory for how they're trying to turn it around. So if anybody's interested in that, you can speak with me after too. They're going to get more information on that.
You got paperwork on it?
I don't. I was supposed to have an investor sheet and everything today, hopefully, but I haven't gotten it from him. So if you want to discuss that more, I can grab your email and we can go back and forth and put you in touch with him. So what is multifamily syndication? It's just a real estate investment strategy where essentially a group of individuals are going to actually be purchasing a property, a portion of that group, or a large apartment building, and a portion of that group is going to be the ones that actually operate and turn it around, and then the other passive investors will be the ones that are essentially putting a lot of the capital up. They don't have a lot of that day-to-day say in how the operation of the property is. And then I just had 4 quick definitions I wanted to go over, how they might come up in the conversation today. First is general partnership. That's the individual that or group that actually does the operations of the property. They oversee the turnaround. They do the actual finding and acquisition of the property and make sure that it's sold properly. So you have to do a lot of different prep work for sale, make sure that you get the highest price for it. So that's the general partnership or the GP. And the limited partnership is the group that's putting all of the equity together, and essentially depending on what type of syndication you're in, there can be different splits. So the limited partnership and general partnership split ownership equity of the property, and sometimes limited partnership is offered a preferred rate of return on what their cash investment is. If you have any questions on these, then I'm sure Mr. Sewell can clear those up. And then another couple of definitions that might come up is reposition. That's essentially a property that's not functioning well or operating properly, and the strategy is to turn it around in order to have it so that it's more profitable and more value. And value add is any investment that, or any opportunity that the investment property has to increase the NOI, which is net operating income, and therefore its value. So all these properties that we'll be discussing today, or examples that are brought up, their value is based solely on what the net operating income is. So the more you're able to increase that, the more you can increase the value of the property. And with that being said, I'm going to introduce Whitney Sewell. He is a family man and owner of LifeBridge Capital. They currently own over 900 units at over $120 million, so it's quite a feat. And he's also the host of the Syndication show, so they just celebrated 300 episodes. And with that, I'll turn it over to you.
Thank you. Thank you very much.
Appreciate it. Yeah.
I may not stay right behind this, just so you know. But I did have just a few talking points so I don't get too way off in left field. But But I am Whitney Sewell, as Chase mentioned. Especially our focus is multifamily syndication. And it sounded like maybe only a couple had heard of syndication before, but so we can get into it a little bit. It was very valuable to hear kind of where everybody's at too, and what you're doing, what you're looking to do. Because I would say about 2.5 to 3 years ago, I would have been in most of your all's shoes that are in here. And so it wasn't that long ago. I mean, I was doing lots of small multis and other things that are single families, but this thing of, looking at this 100-unit apartment building at that time, if somebody had approached me and said, Whitney, well, what about this 100-unit building over here, or whatever it's for sale? Why don't we go look at that? I would say, you're crazy. There's no way I could do that. I wouldn't even give it a minute's thought. I would say, oh, those guys are so far ahead. Maybe 20 years from now, maybe maybe I can do that way down the road. I don't know who those guys are that are wealthy enough to do that, and I wouldn't have even had a thought that was a possibility. And so I'll back up a little bit about when I started real estate and how we got to where we're at, and kind of talk you through that process a little bit. Maybe you'll have some questions. I know a couple people had questions about even podcasting or how it getting started in the syndication business, and I want us to be able to talk about those things and answer your questions. How we got where we're at. And so, at a high level, a little more about me. I was in the military. I had a year overseas, came home, tried to figure out what I was qualified to do, and it was a no-brainer to go right into law enforcement. And so I got hired with Kentucky State Police, worked there for a few years, but quickly there was an income problem. There was an income problem, right? I didn't grow up around entrepreneurs. I didn't grow up around anybody in real estate, but there was a need there. So I was looking for some way to increase my income, and so I got married after I was with the police officer for a couple of years, and then we just passed each other in the hallway the first whole year of marriage. And I said, okay, this is not what's best, and so I have to find, we have to look for something else. And I wanted to do it fast, and so in came real estate. My eyes were open to this thing, real estate, and how many people have built wealth. Lots of wealth. So many people have built wealth through real estate. So okay, this makes sense to me, and so quickly pursued buying a couple triplexes in Kentucky, and too quickly, made a lot of mistakes, paid too much. Didn't do proper due diligence, so many things, right, that have paid us going forward. Now, thankfully we learned, back then, that was in 2009. And then since then, we bought and sold numerous smaller multifamilies up to about a 15 unit. In that time, I left the state police and became a federal agent, and that's what moved us to Virginia. To Roanoke, actually, where we still live. But during that same time, I'm still buying multifamily, small multis or single families, and it's just really occurring to me that this is going to be very difficult for me to scale as fast as I would like to anyway. It's going to be difficult for me to scale. It's going to be a lot for me to manage if I'm planning to manage all these myself. Especially when I got to that 15 unit, it wasn't right in Roanoke, so it was quite a bit for me to go to and and manage and all that. So I was introduced to syndication, that term. I'd never even heard that before. I didn't even know that this was even out there, that you can even invest like this. And so I was introduced to that term, started doing research, started educating myself, right? Just like a lot of you all are here tonight. You're here to meet people, to start learning about real estate business and how other people have made it, right? So you can follow in those shoes. There's no sense in recreating the wheel normally. There's plenty of people that have already been there. So introduced to syndication, started reading, started studying, started listening to all these podcasts about syndication and trying to figure out how I could get there. Quickly said, okay, this makes sense. Syndication, Chase elaborated on some, was really just the pulling of people together, grabbing lots of people together, pulling lots of people together to purchase a larger property. It's not rocket science. It's what syndication is, and real estate syndication is to purchase a large asset, while pulling lots of investors together. And that's what we do. That's what the syndication business is. it's at a lot larger scale possibly than maybe what some of you are doing. But as far as the properties that you're looking at and the due diligence and some of those things, it's very similar. It's very similar. There's just another aspect of raising capital and networking, meeting investors, and some of that is possibly what you think you're not doing right now, but you are, whether you know it or not. You're meeting investors every day, and we can talk about that as well. So quickly, I figured out, okay, syndication business is what I want to do. It's where I want to pursue. I do not want to keep having to fix toilets and call tenants and doing all this every day myself. I can see, okay, long term, this is not as scalable or as quick as I would like to make it. And so pursuing real estate syndication, I quickly started networking, just like what you all are doing now. Quickly started going to network or events like this and other conferences all over the country, just as hard as I could go. Okay, and so I'm meeting people all over the place. I had so many conferences, and I'm sure you all probably covered this before, but it's so important, so I want to talk about it. Is that connection with somebody? It's not just blasting out business cards, right? It's not the shotgun approach, but it's having that one or two just really good interactions, even if it's just one. It's worth your time. It's worth your time going to that meetup or that conference. And so, while that interaction is so important, it's not the most important thing. And the most important thing is the follow-up. And this is even something I didn't do very well. Initially, it's not something I did very well when I first started in this business, and we're improving all the time now. The more I'm learning about even that part of the business, because you think, okay, I'm just learning how to find this 100-unit building and how to do the due diligence and all these things, but there's so many other things over here in the background that are so important that we're constantly improving, but initially we didn't have very, very good, honestly. And so we're constantly getting all these things better, but key thing about that whole thing is following up. Whether it's email, phone calls. Chase and I were having a conversation before we got started, and I guess before anybody got here, and he was asking what's happening recently. And we did close on a 180-unit property in Colorado Springs 7 weeks ago now, I think, 7 or 8 weeks ago. But I told you, I said the last 2 weeks have been some of the most productive, that I can remember in a long time. And he's like, well, why is that? And I can say because I was following up with a bunch of people that I haven't connected with in a long time. And guess what? It brought along new opportunities. It brought along new parts of this puzzle that we're piecing together for these next deals that we're looking at. And so we'll get into some of those teammates that you have to have in the syndication business in a minute. But those are a few of the people that I've been able to connect with over the last few weeks. I'm always connecting with investors, and we're talking about deals, we're talking about what we're doing, all those things. However, over the last couple of weeks, there's some key investors that I was able to meet that everybody wants to know. I'll just say that. It was that good, but it's all from following up. It's all from following up. So. So since I know that like you're doing something different every month, we'll talk a little more about syndication and so I would say too, one of my problems initially was thinking this big. I would have never dreamed that this was possible. And I'm thankful I could be able to speak to guys like you all now, and some of you much more experienced than others, and some of you getting your first deal. Congratulations to some of you. That's awesome. That's really good. But at that time, I just remember that I just really had these blinders on. I would have never dreamed that this was possible. I would have never thought that this was possible. And so, and I want to stress that. Because that mindset was wrong, okay? And I wasn't exposed to the possibilities of what you're capable of and what your options are really in this space. And so I just would have never dreamed it. And so I say that because even now, let's say now you're thinking about wholesaling, you're thinking about some single family flips or rentals or whatever. But let's say 2 years from now, you're like, no, I want to really grow this. I want to really make this a bigger business. I want to do this full time. I can really, you've done, even if it's just a few single family rentals, now you've made up your mind, I can do this. Well, guess what? For that last 2 years, you've been building a track record. You know, how are you talking to people? How are you presenting yourself? You know, what kind of deals have you done? How are you following up with people? You know, even the investors on that single family, guess what? You know, you're building a relationship with them, you know, so when you move to that 100-unit complex, even if it's 10 years from now, and you've built that relationship all this time, guess what? They're probably going to follow you, right? I mean, you've built that friendship, you know, and so they're going to be a big partner, you know, moving forward. And I say that because you're building those relationships now, whether you know it or not. And so, you know, you're meeting people at the post office, you're meeting people wherever, at school, or, you know, wherever. You never know who that investor is going to be. And so it's just about providing value to them. I mean, it's about telling them what you're doing, you know, and then just building some curiosity, and then moving forward with the conversation, following up, right? Following up. So, so in why syndication? It's just the ability to scale. The ability to scale much faster, okay? The ability to take lots of people along with me. You know, so if we have 20 investors in a deal, I mean, they're making great returns. I mean, they're making great returns. They're owning real estate. They're gaining the benefits of owning real estate, and we're able to help them as well, right? We're able to help them, and then also, I mean, we're in the process of starting a nonprofit. We're able to do things like that as well, you know, that we couldn't before, you know, and we can grow this much faster, and so on a business level. But I also love being able to work with professionals, just a day in and day out for the most part, we'll say. You know, like hiring professional management. You know, so you know, you as an investor, you know, would you like to think that I'm personally managing that 180-unit complex all the way from, you know, from Colorado Springs? Would you feel really good about that investment? You wouldn't, would you? And I don't want to be managing it, right? And so you know, we're able to work with professional teams on the ground who are much better at management than I ever would be, okay? Or I wouldn't say ever, but at least right now, it's not my focus, right? I want to hire the best teams on the ground that I can find. And we're able to do that by buying, you know, larger buildings, and we're able to afford, you know, that on-site management, and that on-site maintenance man, you know, things like that. So things are fixed quicker and much cheaper as well. You know, than if I had, you know, let's say 100 units scattered all over town, and you know, and my guys are having to just go all over town all day long, every day. You know, we're just so much more efficient, right? Especially after we buy, you know, that second complex or that third complex, you know, in the same town. You know, now things start to get a lot cheaper. Okay, a lot cheaper. And that's just not something that that I found you can do with single-family homes or small multis. So I know lots of people have been extremely successful with single families and multis, so I have nothing against that. I understand this is the avenue I've taken, and this is why. Yes, sir.
How would you define a small multi?
So, I mean, to me, I would say most of the time that's going to be like, I would say 20 units or less. You know, or you know, if we're talking like non-commercial, that'd be 4 units or less. But personally, I want anything that's really, I mean, we're not looking at anything that's less than 100 units, preferably 150. But, you know, anytime you're around 70 units or less, it's going to be hard to afford on-site management, or 75 units, sometimes 80, depending on the market. And so, you know, at that point, once you pass that, you know, is when you can start to afford, you know, somebody that can be on-site all the time.
All residential?
Yes, all multifamily, yeah, residential. Yeah. So, you know, a couple other things like the scalability, the non-recourse debt. Anybody know what non-recourse debt is?
Yes, sir.
Yeah, amazing stuff, right? Yeah, non-recourse debt. So if you're buying a single-family home, you know, what are they doing? I mean, you're signing on there, right? You don't pay it. What are they going to do? They're going to come take your vehicle, right? Or they're going to come take the house. They're going to come. Right, they're going to come after you, right? And on larger properties, that's not the case. It's non-recourse debt. You can get recourse debt as well, but our goal is to have non-recourse. And so, like on this property, the 180 unit, we had 10-year fixed at 3.8%, which is amazing. So we went in at 4.3, I think, and we thought that was pretty good. And then we had an extension. We did an extension. We were waiting on documents from the seller, so thankfully we did an extension. And then by the time we closed, it was 3.8. So I mean, that's a big deal. You know, when you're talking $20 million, it's a big deal. So so non-recourse debt is just one other thing about the syndication business. When you're doing deals of that size, bigger returns. Getting started in this business, how many people now have a mentor? 2 people. 2 people in here have a mentor. So, and a mentor doesn't have to be a paid mentorship. It doesn't have to be, some big name or figure, but one big way, it's so important. Do you have a mentor, Chase?
Yes.
I'm sure you have some kind of mentor, right? Somebody that's ahead of you. So important. Find that person that's ahead of you. Find that person who you can add value to. Find that person, even if it's a paid mentorship, which you have to go into those very carefully, but there are some good ones. And that was a big turning point for me. Really thinking bigger as well when I'm thinking of spending some money on somebody to help coach me a little bit. Like I had some real estate experience. I had enough just to be dangerous when I started thinking about these larger properties at that time, right? So I wanted somebody that was way ahead of me. And that's what I did. So I found somebody that's way ahead of me that's done this, that owns hundreds and hundreds of millions, dollars of real estate, and had done this time and time and time again. And so that was crucial. And what I found is, I'll still talk to this individual like almost on a weekly basis or a couple times a month, even. But what I find is that even if I don't think I have anything to talk about, I still take a lot away from the conversation. Or he'll say things that make me think of things and think of other questions. And so I cannot stress to you enough, if you really want to do this, that you need a mentor. There's always somebody that's ahead of you. There's always somebody that can help challenge you, and also when you have that mentor, it gives you just a boost of confidence. Okay? It gives you a boost of confidence in a big way. Now you have somebody to look over your numbers or have somebody to think through this deal with you. And so I challenge you, who is your mentor? Even if you're just passive investing, you can still have a mentor. You can still have somebody that can help look over deals, or maybe somebody else that's invested passively in more deals than you, with more deal sponsors, which is normally like myself or the general partnership's called. So find a mentor. If flipping is your thing, find somebody that's flipping, you're wanting to flip 10 homes this year, find somebody that's flipping 100, and add value to them. Work for free if you can, okay? Work for free for a year if you have to. If I was single and didn't have kids and was getting started, I would be finding somebody that's very gung-ho, somebody that's very way ahead of me in this business, and I would be trying to add value to them before I ever met them. Okay? Even if it's just sharing their posts on social media, you're adding value. It's a way for them to see your name. And anyway, there's so many ways, things that we could talk about just about mentorships, but it's key. Whether it's syndication business, whether flipping is your thing, or single family rental, I don't care what it is. If it's growing your lawn care business, you need somebody that's ahead of you. So I can't stress that enough. But syndication business specifically, most people get started by raising capital. Okay, most people are going to get started by raising capital, and that's a whole other discussion as well. But it's all about these connections that you're making now. It's all about these connections, these people that you know now, and it's all about letting them know what you're doing. And it's still in that first connection, in that follow-up, in all your interactions with them, and reaching back out to them. And so now you're building this relationship over these years, or the first year of doing wholesaling, like I said, or whatever. But now you're going to step it up, okay? And these relationships are so important that you've been building. Even though you weren't thinking about that at that time, you have to be thinking ahead, right? And I want you to open your horizon a little bit, open these blinders, because I know that's what I had on as well, sitting in meetups, not too many years ago, and everybody in there was really thinking about single family rentals. That was their passion, and that's fine, but that wasn't what I wanted, and so. It's just important to be able to think bigger and think a little bit further ahead, and just think about the importance of these interactions that you're having. So you do start to do bigger deals, or even if you want somebody to partner with you on a fourplex, but you've been doing single family flips or something like that. These relationships are so important, and so important that you're treating them, just like they're family. Couple things I wanted to address about I know since this is like the syndication meeting, we'll talk about a couple, what's called exemptions, and a couple of ways that people do deals. And one can be what's called a 506B offering, or one can be called a 506C offering. And a couple, actually let me back up and talk about an accredited investor versus non-accredited. Anybody know? Everybody heard about accredited versus non-accredited? A couple, 3, 4. So accredited investor is going to have a $200,000 income or $300,000 jointly with a spouse, okay, or $1 million net worth. All right. And I think that they've had to have had this over the last 2 years, I think. 2 or 3 years, but so they had to have. That's the requirement to be what's called an accredited investor. Thank you. And then, but then a non-accredited is what we're going to call a sophisticated investor. We want somebody that understands investing, has invested in real estate before, understands the risks, some things like that. And when we're having those conversations, if you're talking to me about investing in a deal, I'm going to make sure that, it's kind of like going to your financial planner when you sit down and he's handing you that sheet to figure out your risk level, right? And I want to make certain that you understand it's an investment. I think it's a lot safer than the stock market, personally. But I want to make certain that it's an investment, right? And obviously, it's in real estate. You're going to see the asset. You're going to know exactly what you're investing in. But whether you're accredited or not, I want you to understand the risk. But accredited and non-accredited is important. And so when you go to start telling investors about what you're doing, that you know that you're doing it legally, okay? And so we cannot. And I won't get too in-depth into this, but because we could spend hours just talking about this subject. But if someone is doing what's called a 506B, you can just remember 506B offering, they cannot advertise. Okay, I cannot, even if I had a deal right now and I just met you all, like I've met Devin before, he and I could talk about it because we have a pre-existing relationship, but everybody else in there, I couldn't just stand up here and just blast that deal out. Okay, that would be soliciting. Okay, and it's illegal. It's highly illegal. So, but if it's a 506C offering, then I can blast it out. I can put it on a billboard. And so it's just something to think about. If you've got a deal in your inbox and it said, you've never met that person before and it says it's a 506B, that's a sign, a red flag that, wait a minute, this is probably not something that I probably don't want to invest with this guy, right? But if it's a 506C, then yes, they can blast it out on social media. They can put it everywhere. So 506B, they can have 35 non-accredited, and then everybody else has to be accredited investors. And 506C offering, everybody has to be accredited, and you have to verify it as well. So we would go through a verification process. You can hire a third party, or we can have like your CPA, somebody like that, and actually verify that you're an accredited investor. Any questions about that?
Yeah, repeat what you just said about 35.
So if it's a 506B offering, we can have 35 non-accredited investors. But but anybody else would have to be accredited. So we have to track that. We have to make certain that we don't have more than 35 non-accredited in a 506B offering. Okay, but in a 506C, everybody has to be accredited. Okay.
I usually go with the C is I have to see that you're an accredited investor.
That's right. There you go. That's good.
That's how I remember it.
I have to see you're accredited. That's good. Yeah, and you have to verify it. So,
how much income did the accredited investor need?
$200,000 by themselves, $300,000 jointly, or $1 million net worth.
I think that's the one you have to have for 2 years.
Yeah, I was thinking 2 years. It has to be for
2 years on the income, but I don't know if it's 2 years on the
net worth.
Net worth.
Yeah, that sounds right. So
the other thing too is to be. Chase put it up there, you had a GP and an LP.
Mm-hmm.
The LP is your accredited investors for the most part, or your sophisticated.
That's right.
The GP, is there any financial levels that you have to be a GP?
So, good question. And I would say there's no financial levels to be a GP. And so you can be a general partner, you can be a deal sponsor. You could be finding the deal. So let's say Chase had an amazing deal in Harrisonburg, 200 units, whatever, and he said, "Hey, Whitney, I think this would be an amazing deal." He may not be accredited, but we're probably going to bring him in on the GP side if we close on that deal. Okay, he would be a general partner on that deal along with us, or he may just be boots on the ground. He'll be doing some asset management stuff for us. or something like that. And we'll put him on the GP side, and then he'll gain some equity in the deal, and he'll be paid a lot better that way. And so, and let's talk about that as well, like GP versus LP. General partnership, as Chase mentioned, would be like me and my partner, anybody else that is working to make this deal happen. Okay, and that's usually going to be the asset manager, somebody that's doing the underwriting, somebody that's doing the due diligence, somebody that's are in charge of investor relations and marketing, and then numerous times. I mean, we'll have many of those or titles, individually. There'll be a couple of us on the general partnership side, or 4 or 5. Sometimes there's 20, and that's a whole other subject. But also, general partnership side are going to be the ones that are making the deal happen. They're the ones that found the deal. They're the ones that's doing all the work to operate the deal, all that. Your LPs, your limited partners, are your passive investors. And they're the ones that also, they do not want to do any work. There's a reason why they're a passive investor. They're either retired, or they're a busy entrepreneur, they're busy running their own business, something else, but they want to own real estate. Or maybe there's somebody that has a lot of passive income from another business, and they want to offset that passive income. So guess what? They invest passively, okay, into deals like this. All right, I mean, they gain a massive benefit in that regard. And so general partnership are the guys that, like myself, that are finding the deal, that are doing all the underwriting and the due diligence and operating it. And the LPs, limited partners, are passive investors who are investing in, they may never see the property. A lot of investors will never even see it. They don't want to see it. They don't, we've built a relationship over numerous years. I sit down an offering and they're like, yeah, put me down for 100,000, or put me down for 50, or put me down for 200,000. And it almost, I'm like, wait a minute. I know you didn't just read that. You didn't even read through the email. I want you to understand the opportunity, the deal here, right? And then we'll have numerous calls and, to answer questions and to make certain that they understand the opportunity or the deal of the property. So, but again, that's relationships that I've built over numerous years. And that's where, you're doing that now, whether you know it or not. And so that's what I want to stress to you as well. A few years ago too, if somebody got up here and started talking about, I've been in numerous conferences where, somebody gets up on stage and they're talking about the importance of your mindset or the importance of your why, and I'm like, come on, let's really get to the meat here. I mean, that was really what I thought. I was like, goodness, I'm going to go out and network for a while they're talking about their mindset and their why, right? Thinking that I had that figured out. Well, the more I've learned, I mean, I can, if I just stressed to you tonight your mindset and having your why lined out, if you could do that, you're going to figure this, and syndication is what you wanted to do, or flip, you're going to figure it out. You're going to have that strong why to push you along. You're going to be remembering why you're doing this, something bigger than just the next unit or next house or whatever, and then you're going to have the mindset too to really be thinking forward, thinking, so, and I'll go back to, in the military, and I mean, of course, law enforcement academy, all those things are very similar. But one specific moment when we were on before graduation in the military academy or boot camp, we go on this 3 or 4 day journey, right? We hike out with all our gear on, 15 to 20 miles. You think it's just never going to end, and the drill sergeants are just looping you around all this, to get you, just to really wear you out. Okay, but what are they? I mean, they're not just trying to wear you out, but they're training your mind, right? They are training your mind. And so I remember going out and just march. We're carrying all this stuff, right? And then we get out to this place. We're out. We're there for about 3 days, all night. They're blowing up all kinds of simulators. You're getting shot at, all these things, right? You and your battle buddy have dug foxholes and you're hiding, and I mean, there's just all kinds of just chaos, right, for 3 whole days. And then what are you gonna do? Well, you gotta get back. Okay, so now you gotta march back for 15 or 20 miles carrying all this stuff. Well, you barely slept, that entire time. And so, the whole time, I mean, most kids, 17, 18, you've never experienced anything like that. Right? I mean, that has pushed you so much further than, let's say 2 months before you got to boot camp. You would have never dreamed that you could do that. Okay? And so, but it's the importance of having the mindset that, I can keep going. I can do this. And I think that has helped me in the real estate business so much. Okay? But I remember on my way back, We are, we're on both sides of the road with like a ruck march. We're lenders for non-recourse. Do you have anybody local, Chase, that you know of?
For around here for Fannie Mae and stuff like that?
Right.
No commercial mortgage brokers that I think of.
Yeah, there's specific mortgage brokers for commercial debt for non-recourse.
Who do you all normally deal with?
There is a group, trying to think of, there's a couple recently that we've been thinking about going with. We were just introduced to one that we really liked. I have to look it up. I can't remember their name right off.
Yeah. Generally, it's a bit too small to find those larger properties that Whitney's buying around here, and in those markets where you find those complexes, you can get referrals to those type of brokers all day.
Right.
Have your broker for the property will refer you, or the actual property management company that you're going to be using will be able to refer you to a good commercial broker for something like that.
Yeah. Yeah, you had a question too, right?
Yes. What does a person such as myself, who doesn't have a lot of capital, doesn't have a lot of initial value, what moves do I need to make to put myself in a position to become a part of something like this?
Just to invest passively, or just
to the multifamily and
So a great question. So pretty much how do I get started? So on the passive investor side, there's usually a minimum investment that's usually going to be $50,000. Sometimes it's 35, or it could be numerous things, but normally it's 50,000 is going to be the minimum to invest passively. Okay, to get into a deal. As far as getting started in this industry, I got started by raising capital, networking, telling people what I'm doing. Okay, but also a mentor is key. Okay, a mentor is having that person that's been there and done that is key. It gives you confidence, gives you somebody to ask questions to, right? But a bigger part of that is if you can partner with them on a deal or two to get started. Okay, because it's very difficult. It's much more difficult to get started raising capital than everybody in the industry thinks it is. A lot of people are trying to get started raising capital, and they think, I hear it all the time. Well, I haven't done a deal yet, but I think I can raise $500,000. Okay, but when they go to raise that $500,000, all these people that said, I've got $100,000 I'd like to put in. This person said, I got $200,000 put in. Yeah, I got $200,000. Now all of a sudden it's like, my kid's going to college, or we're having to move and I'm not looking to invest right now, or how many deals have you done now? And they're not ready to invest with you yet, or what's your name again? Because you haven't been following up, you haven't built that relationship, right? And all of a sudden they can't raise anything, or it's like $50,000. Okay, and so it's much more difficult than you think it is, to raise that capital. But that's how most people get started. But at first it's by finding a mentor. And that's why I say, if I was single, no kids, and was looking to get into this space again, I would find that mentor, and I would add value to them before I ever met them in some way. I would understand their business. I would partner with them, if they would let me, for free. I would work for them for free just to understand this business. Even if it took a year, it would be well worth it. Well worth it. What were you going to say?
I was going to say, so basically piggybacking on that, how would you find a mentor now? And then I'm sure you see it a lot too, since you're successful in your space, people reaching out and saying, hey, I'll do whatever for you. That's generally, not really the way to go about it, because now you have to think of a job for them. What would your suggestions be in order to, one, have them find a mentor, and then also provide the value in a way that doesn't essentially ask a question?
That's a good point, because it does happen often when people are like, well, what can I do for you? How can I add value? I get that question, how can I add value to you? I don't know. I don't know what you did. I don't know what you can do, And so I would say find that person that's way ahead of you. Find that person who is preferably local to you. They don't have to be. Maybe you're mobile. Maybe you could find somebody in New York and move, if it meant that, if it was that caliber of partner or mentor. But one, find somebody that's in the space now that's doing deals. Okay, find somebody that has a track record, been doing it a long time, and somebody that cares about your success. Somebody that cares about you doing this well. But adding value is something you got to get pretty creative about. It could even be you finding if you're in this space, finding somebody that's local, even if they're not local but they have properties here. If you can figure that out, they probably post about it on social media, in some way or form or fashion. But even going to their properties and taking videos and say, hey, I thought you might want to know this is happening at your property, or hey, you know, I just wondered if it would benefit you if I just sent you a, you know, every couple of weeks sent you a video of your properties, you know, or this is what's happening around here, you know, or a market update of, you know, around their property, or do some comparisons of their property and some other, you know, some other ones around it, or something to show that, like, you're thinking ahead, like you're pushing yourself a little bit, you're going above and beyond. Even liking and sharing their posts on social media is adding value. And I tell people that because they even see your name. You know, you do it enough, they're like, oh, well, you know, I don't know this person, but they remember your name. And all of a sudden, you know, you're at a meetup like this meeting now, and they're like, oh, you share my stuff all the time. You know, so there's already this, like, they already feel like they owe you something almost. You know, and it's something that simple. But it's, you know, finding that person, I like to say, try to add value before you ever meet them, you know, so they know what your name is. But finding the mentor is not easy. I'm not against paid mentorships, okay, you know, because it doesn't make you commit, okay, but there's so many that will just take your money, and you got to be very careful. Bigger Pockets is a great way to vet mentors or coaches. You know, I would get on there and ask, you know, who has been through this coaching program, who has used this guy, whatever. People will tell you. And then reach out to that person individually and say, hey, could we talk tomorrow? What else?
So at this point, how are you going to find deals, or do people just present them to you?
Mostly through brokers. So through commercial brokers, through realtors. Or how we're going to find the most of our deals. Network, that relationship is crucial with the broker. So they're the ones that also you have to build the track record with. They have to know you can close. They have to know the deals that you've done. Hopefully you've done a deal with them before. And so that's a time where you may have to take a property that's, let's say we may have, if we're looking at maybe moving into another market, and to do that, we may have to take a property that's less than 100 units. Okay, just to kind of, we may not, we hope we don't have to, right? But for a lot of local brokers there, people to take you seriously, sometimes you have to close a deal in that market. Okay, for us to find something that was it, the numbers, so we want at least 8% preferred return and a 15% IRR. So that's what he mentioned earlier. And IRR, internal rate of return, and that can be extremely complicated. But the biggest thing to remember is that it takes in the factor of time. Okay, so if I said, hey, you know, you give me $50, I'll make it into $500. Well, how many people are going to give you $50? I mean, right? They're going to want to give you more than 50, right? But I said, well, you know, it's only going to take me 200 years. You know, right? That's not a very good return on your investment, is it? So that's kind of that's what IRR is. It takes in that time factor, and that's usually going to happen, you know, towards at the sale. But finding deals through brokers, that relationship is very important. Very important.
Two questions. What markets are you kind of focused on right now? And how are you preparing if the market takes a real big dip? Good
question. So we're focused in Colorado Springs. We've been in Dallas and Fort Worth with another operator, partnered with them on a couple deals. We really like Colorado Springs, but we're also looking at a couple other Midwestern markets. Boise, Idaho, Salt Lake City, Utah, a couple of those are really good markets right now that we're debating about where we want to go to and focus our time. But as far as a downturn, is it going to happen? Guess what? I'll tell you exactly when. No, I'm just kidding. So, you know, somebody tells you exactly when it's going to happen. Well, that's crazy. Right? Nobody knows. But is it coming? Or most likely some kind of downturn, right? But the big ways we want to be prepared is buying for cash flow. Like I mentioned, buying for cash flow, having great debt. Okay, so like that 10-year debt, what that also helps, and a big reason that's important is, let's say we get to year 4 and the market just plummets. Well, do we want to sell in year 5? We don't, right? We don't want to sell then. We may want to hold it for 7 years. Is that going to be as good an IRR? Probably not, but it's going to be a lot worse if we sold then, right? So we want that flexibility. You never want to be made to sell, right? You never want a bank or anybody else to make you sell a property, right? That's a bad day. That's a bad day. So correct debt, we're long-term debt, some kind of fixed long-term debt for at least 10 years, non-recourse, buying for cash flow, not appreciation. And we also have that reserve budget. That's going to help us weather that.
Well, either you or your partners in the market in 2008?
We were not. Well, so 2009 is when I got into real estate, when I started buying small multis.
That was a good time to get in.
Yeah. But even then, I made a bunch of mistakes. I was just very uneducated,
You can afford to make mistakes after that.
Yeah, that's true. That's a good point. Good point.
Okay.
Do any of your loans have interest only?
Interest only, that's a good question. A lot of times it'll be like the first year, the first 2 years, something like that, maybe interest only. And then we'll be paying towards the principal the second or third year, and then throughout the life of the deal. Normally, something like that. So, initially there's a lot that goes into that value add property, right? I mean, we're having a lot of tenants we're having to kick out, or even our vacancy rate, may go up a little bit, right? I mean, because there's a lot of work happening. We may be turning over a lot of units. And so, the first so many months or even year, you may see, vacancy rates increase, at times. And that's not, it's just part of the business. But then hopefully after 12 months, 18 months, you really see it get really steady, and even the rents going up in a big way.
Is there a reason you're not looking at the Southeast?
No, there's some great markets in the Southeast. And one big reason is my partner's in Denver. So I have boots on the ground there. And, we can manage that property, those properties there now much better with somebody local, being right there. So and that's not always a must. But that's when I prefer it, knowing somebody there that can really be some boots on the ground.
But you are in Dallas, Fort Worth. That's a good market.
Yeah, we've partnered on a few deals there. Yeah, it is a really good market. So even something like that, like it's a lot harder to build those broker relations in a market like that. So it's, I personally feel like I could find more deals looking in other markets that are really good markets before I find the first deal going to somewhere like Dallas. There's so many people, it's so hot, there's so many people there, right? So I feel like I can probably find 2 deals that's going to provide almost as good a return in the time it would take me to find that one deal in a market like that. Does that make sense? So. What else about syndication or capital raising or I will say the big part about you partner with that mentor, getting on that general partnership side is a big deal. That is you're building a track record, right? You're building your brand, and now all of a sudden when you go to investors, you can talk about your team, you can talk about this, what the mentor's team has done that you're a part of now, and that it changes your conversation with those investors in a big way. It gives you some confidence because you're really piggybacking, off that person and their experience.
It seems to me that the most important things besides the cap rates and what you think you can do down the road and that sort of thing is you. And also whoever's running the property manager.
Very much so.
It would be almost more important to vet those people than it would be to the overall performance of the property.
You're exactly right. So your relationship with that operator or their experience or their track record is so much more important than the actual deal itself. You're never going to understand that deal as well as they do. They're going to answer all your questions. If you're a passive investor, I'm going to do my best to make certain you know exactly what you're investing in, that all your questions are answered. You're like part of the family then. You really are. You're like part of the family, and we are communicating very often, and we want to be as transparent as possible. We're doing all those things. But so that relationship with the operator is extremely important. In some passive investors or LPs are doing background checks and even things like that now too, on operators. But it's something to consider, especially if you've never met this person before. Something to consider. Getting that background check. It's pretty inexpensive. And so I didn't tell them, I'm going to do a background check. Anything I should know about? See what they say, before you even do it. They may tell you something then that keeps you from even having to do it,
So when you bring someone in as a general partner, what you would be looking for is it's at least 100 and you said 50 units, 125 units, something like that.
So if you were somebody that found the deal, it could be boots on the ground, at least 100 units, yeah.
And does that mean that you got that deal under contract and then you take a look at it?
No, we want to know about it long before that. There's a lot that has to happen to make that deal work long before you ever get it under contract. So at that time, that's when your team and your track record, all those things need to be very well established, or else you'd never get it under contract, most likely, unless you were just extremely high net worth, had the balance sheet yourself. It would be very difficult to do that without. So a broker's not going to take you serious unless you close on a deal or two, most likely, at least one, a large, commercial property. So if you found an opportunity like that and you approach somebody like myself, we would just at a high level look at it and see if it's something that we're interested in. And then, if it was and we closed on it, yes, we would bring you on the general partnership side. So, but being on the general partnership side means that you have some kind of value that you can add to the team, and you have by finding the property. But then we would recruit you to be boots on the ground a lot, through the majority of the life of that deal, to help us in that way if that worked out. But so on the general partnership side, you're doing something. You're adding some value, to that team, whether it's due diligence, whether it's underwriting, whether it's marketing. There's lots of things. You have to be, or it's not a true general partnership.
Also, too, I would think if you're getting started as a GP, general partner, you went to buy a $20 million property, and you went to the bank and they said, to get the Fannie Mae, you say, I need to borrow, I'm going to raise $7 million, but I need to borrow $13 million. And they said, how many deals have you done? And you said, none. You're probably just, here's the door.
That's right. They're not going to give you much time. Yeah. That's right. So even if you go in the bank now and you're looking at buying a fourplex, I would encourage you to have a bio, have some track record, have something you can hand them. Just show your experience, show what you've done, show who you are. Just be as professional as possible and already have that information for them. Don't make them even ask, and present it as nice and crisp as possible. When you present that.
This might be a dumb question, but how could we go about to go find the property that we can present to you? How could we go about, if I wanted to go out and find something and to present it to you and some other partners, how could I go about to find it?
Broker relations would be one key thing. So finding commercial brokers, telling them what you're looking for, telling them maybe somebody that's done numerous large deals, or you're connected to somebody. Even then, your team's important, right? Having that mentor, having somebody that you're really connected to. But even then, maybe you find something that's off market. Just because somebody knows you're in real estate and they say, hey, I heard you're in real estate now. I've got a friend that has a 80 unit complex, and he's or maybe the owner died and the kids don't know what to do about it. You just happen to have that connection. So it's still letting people know what you're doing. Letting people know these things. So, because a lot of people don't want anything to do with real estate, but they have lots of friends and family that are connected into real estate. Or they know somebody that has a friend whose father just passed away, and you just happen to be talking to them about what you're doing in real estate. Oh, I just heard this. And that's the way so many deals happen.
You talked a lot about mindset, mentorship, learning things. Are there any books that you recommend for any of that, or just ones that you've read recently that they stuck out?
Great question. So the syndication business, Joe Fairless, the best ever real estate syndication book, is a must if you're going to be in the syndication business, even if you're going to be a passive investor. One I like for business is called The Road Less Stupid. And it's a good just business book. Another one I recently read called one called Never Split the Difference, a negotiating book. Really good. Chris Voss. And then trying to think of just some of the top ones that anybody use Audible?
Yep.
A little bit.
Man. Traction's a good business book. One that's really long but is worth listening to or reading is called Power by Robert Greene. I mean, it's like 40 some hours long, but no, I take it back, it's 14 and a half hours long.
Oh, that's it.
No, that's what's left. So, but it's good. Anyway, yeah, great question. The first book I mentioned, Best Ever Apartment Syndication book by Joe Fairless. Mentioned Traction was a good business book. The Road Less Stupid by Keith Cunningham, which is a really good one as well. Crucial Conversations by Carrie Patterson, good book. A really popular book too is called The One Thing. If you're talking about mindset and your focus and some of that, that's a great place to start as well. One book a couple years ago that I remember reading is called The Miracle Morning by Hal Elrod. Yeah. You know, it's another good one. Just thinking about how you're called The Miracle Morning. It's just how do you spend your time when you first get up in the morning? I would say that was a big change that helped me like really just push to the next level. Was really being purposeful about how I'm spending the first 2 hours of my day. You know, let's get up at 4:30 every morning and really think about, how I'm using that time, thinking about my day. Is it structured, and how am I what am I accomplishing today? Really thinking that through, not just whatever happens, but being purposeful.
Do you find yourself doing it the whole day, being very aware about how you spend your time, so not be on email constantly, or?
It's a good question. So it's taken practice, or you have to be purposeful, else I'll sit on email all day long. Yeah. I mean, it's ridiculous, right? How much time is spent on email. It's annoying to me to some extent, but being purposeful. So now we have a team. I've got 3 other people that work for me, and they're all doing different things. When we started the podcast, I had 4 all the time, and sometimes 5 via virtual assistants that were doing something different almost every day for the podcast. So we built a team, right, just for that, and so we could do it really, really good, the best we could do it, and built that team before we ever launched, so we could make that happen. No different than operating this property. We were building a team before we ever go under contract. But as far as my day. Yes, so being very purposeful. I do find myself probably checking email too many times throughout the day, but one important thing is responding to these investors. And so it's very important to me that I'm responding. I never want it to be more than 24 hours. I would prefer it to be like 2 hours at the most. But I have to look at the email to know who that is, right? And even my assistant's helping me some, like check email or even just letting me know there's an important one that I need to address, maybe sooner than I might get to email, things like that. But even in the mornings, having time for reading and having time for educating myself, making certain, that I'm reading some books right now, knowing that I'm educating myself, that I find that I'm more motivated, too, when I'm doing that, when I'm pushing through some books and reading and educating. And I find then too that I'm more equipped to help other people, as well. So that's been really key, in helping us move forward. But that time in the morning, I can't stress that enough. Even working full time, doing the podcast, 3 kids at home, just going through our 3rd adoption process, which if anybody knows about adoption, it's just a crazy roller coaster. And so doing all it can be done. It can be done, but that's having a very systemized way of doing things. And so, I use software a lot. We have a thing called Appointment. It's called like Calendly, where people can book calls, and I can lay out certain times of the day where I can take calls. It's not uncommon, at that time that I was taking calls from 5 a.m. to 7 a.m. before I would go to work, like every 15 minutes, back to back to back. And so I say, well, how motivated are you? If I need to get more calls in, well, that's when I can do it. If people will book, then okay, I'll take it, right? You have to be, it's going back to that mindset, you have to be willing to do what it takes to get it done. And that's what it was at that time. Awesome. Being willing to put in 18 hours a day. Everybody's situation is different, but my spouse had to be very on board and very supportive, and she is. And otherwise, this would not have happened. Sometimes she says, "I'm so proud of you." And I say, "We're a team." I mean, even if she's not in the real estate business at all, she plays a massive role, because she's maintaining the house and the kids all day long, every day, while I'm in the office for 18 hours or more, or gone for 18 hours or for numerous days to a conference, so it's crucial that she's on board.
How many of your investors come through your podcast?
Good question. It's happening more. So at first, it was all the conferences I had gone to. So almost every conference I've been to, I've had investors from those conferences. Okay, so it's something to think about. You're going to a real estate conference. You're not thinking that you're meeting an investor, but you're always talking to potential investors. Okay, and so, but podcasting, any kind of thought leadership doesn't pay right away. It takes time for that to develop. Chase and I were talking about it, and I tell everybody, if you're going to do something like that, expect to do it for at least a year before you really see a return from that thought leadership platform. Whether that could be a blog, it could be a podcast, it could be a meetup, just like this is thought leadership platform. There's numerous avenues, to have that platform. It could just be a Facebook Live you do, a couple times a week. People know that that you're going to do it. You start a group, but more, it's happening more now. That brought up another good point. So, I had a conversation, we had a conversation with an investor last week, I guess, and we talked for about 30 minutes. He talked almost the entire time, okay? Which is great. But at the end, I said, well, I got another call in about 2 minutes. I'm going to have to go. And he said, I didn't even let you talk, And I said, it's no problem. He said, no, he said, don't worry about it. He said, I feel like I already know who you are anyway. I already know you. I've heard you talk so much. He's heard me, over and over and over through the podcast and, other events and things like that I've spoken at. So that's where it pays. It's like, I'm connected to these investors and they already feel like they know me. They've heard so much about my background and who I am before we ever get there to that conversation. Our why is we're half of our profits go to help fund children's adoptions. And so that's a big part of who we are as well. And we've done 3 adoptions personally, my wife and I, and so we're committed to helping other families adopt. A lot of people connect to us, from that as well, because they want to give in that way, or it doesn't affect investor returns at all, but investors like knowing that they're playing a bigger role, something bigger than just owning an apartment building or, something like that. But having that why helps me to stand out as well, right? Even if we weren't giving in a big way like that, but knowing that we're supporting adoptions and things like that, it's another way for people to remember who I am. So your why, your mindset, is so important. What else? Or anything about syndication or raising capital or getting started in this business?
I'm worn out now.
Me too. But I will say there's numerous people who are able to get into this business quickly because they had a very successful wholesaling business or flipping business or something like that. But it's because of all those investor relations, all those relationships they've built over that time. They've proven a track record, even in real estate, before they ever got into the larger deals. And so all those investors, all those partners you've had, have seen you in real estate, you've been building, like I said earlier, I just can't stress it enough, those relationships are so important. And so it's not, maybe as hard as you may think sometimes, if you've been doing this a while, to get into the syndication business. What else? Look at my notes again, but no questions?
I got one. So, are you familiar with Grant Cardone?
I am.
So is this what he does, or is he doing something else?
So he does syndicate deals. I'm not connected to him in any way. I'll put that out. But I mean, he's syndicating deals. He's raising capital from investors. That's why you see him everywhere, all over social media. Yeah. People connect, and invest with him in those deals. That's right. So they're providing, he's providing that return through those properties, just like we were talking about. Yeah. So he's value-added multifamily. I don't know that he invests in any other asset class. I'm not sure.
I don't think so.
I don't know him that well. Anybody else do any other asset classes like self-storage or who chases mobile home parks? Anybody else? No?
Mhm.
All right, well, I hope you'll listen to the podcast. You know, if there's an operator you're looking at partnering with, a lot of times.